The government says new measures will be out tomorrow to stabilize the markets. The U.S. Senate fails to pass a rescue package for the American economy, the Democrats saying it favors big business. 100 million Americans are on lockdown and are looking for relief as they face massive job losses. And South Korea is now putting all people arriving from Europe in quarantine while they get tested for COVID-19. And if they come out negative, they'll still have to stay in isolation for 2 weeks. It's 5 o'clock p.m. here in Seoul. Thanks for joining us on Arirang News. I'm Devin Whiting. A total of 324 people who arrived from Europe have been put in quarantine at a state-run facility in Jincheon, Chungcheongbuk-do province. These people have been confirmed to show no symptoms of COVID-19, but they'll be tested and will stay at the facility for up to 24 hours until the results come out. South Korean nationals arriving from Europe, even if they test negative, will have to self-isolate at home for 2 weeks. Foreigners who test negative will be isolated at government-arranged facilities with some support for their expenses. Those who test positive will immediately be sent to designated hospitals or treatment facilities. South Korean Prime Minister Chung Se-kyun says stern legal action should be taken against religious groups that went ahead with worship services over the weekend, despite warnings not to because of the coronavirus outbreak. In a meeting at the Central Disaster and Safety Countermeasure headquarters on Monday, Chung said the government's administrative order suspending large gatherings is not a bluff. He again stressed the need to implement strict social distancing. Chung added that the authorities are looking into stronger quarantine measures to prevent infected people from coming in from abroad. The Prime Minister also vowed to personally check on the support being given to small businesses and give the people weekly updates. The South Korean financial markets got hammered once again on Monday. Trading on both the Kospi and the Kosdaq had to be temporarily suspended. Kim Da-mi reports.
South Korean stocks had another rocky start to the week this Monday. Despite the rebound last week, thanks to the $60 billion currency swap deal between Seoul and Washington, the benchmark Kospi lost over 5% to finish below the 1,500 mark. The Kosdaq also shed over 5% at 443.7. Earlier in the morning, both the Kospi and the Kosdaq plunged over 5% at the opening bell. Because there was a difference of more than 5% from the previous close, a sidecar was activated to temporarily suspend trading for 5 minutes. In the 2 months since South Korea confirmed its very first COVID-19 case, 1/3 of local companies' market capitalization has disappeared into thin air. This is according to local market researchers Korea CXO Institute on Monday. The institute analyzed the top 100 local companies from January 20th to March 20th and found that their market cap had dropped from around $700 billion to just under $500 billion. So in just over 2 months, the total value of the companies had dropped almost 30%. On top of the supplementary budget and the $60 billion currency swap deal with Washington last week, Seoul's COVID-19 response team plans to announce new measures to stabilize the financial market.
The government has actively responded to the most urgent problems while closely monitoring both local and global economic conditions. Tomorrow, the government will unveil measures aimed at stabilizing the capital market.
The chairman of the COVID-19 response team added that within the next few days, the team and the government will discuss ways to distribute the disaster management funds to help those suffering from the outbreak and revitalize market demand. Kim Da-mi, Arirang News.
Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Yang Jun-seok, professor of economics at the Catholic University of Korea. Professor Yang, thank you for making time today.
Happy to be here.
Well, as we just heard, Korean stocks today down over 5%. On Wall Street, the Dow closed last Friday down another 4.5% and is looking at a sharply lower open on Monday. What's the story in the global stock markets today?
Okay, well, let's start with the U.S. market. The U.S. Market started really falling right after the Fed's 2 rate cuts, ironically. And I think that's because the Fed's unexpected interest rate cuts really made the market realize that things are much more serious than even they thought at the beginning. Now, I'll go into it later, but I don't think the Fed cut was meant for the stock market. It was meant for the real economy. But it's dealing with a situation right now where the investors as well as private companies are engaged in, I think, flight to safety and flight to liquidity. Now, we saw this flight to safety before during the Asian financial crisis in '97, global financial crisis in 2008, but back then, the flight to safety, flight to quality meant gold and bonds as well as cash. But this time around, all the investors seems to be going for U.S. dollar in cash. So even gold and bonds are not as attractive as it were in those two type of cases. So what we're saying is that the investors mostly are switching to cash, and the long-term investors, I think, are just ignoring this because, well, they cannot adjust to such rapid changes. And what we're seeing right now is very short-term traders who are basically selling on the day that it goes up and buying on the days after it goes down. We're seeing a very rapid turnover. I don't think this is representative of the market, a normal market. So I think it basically means that we're in a panic. Now, as I mentioned before, the Fed's rate cut was not meant for the stock market. I think it was meant for the real economy, businesses which are in risk of fall in demand. And because the U.S. companies are very highly indebted right now, they're very afraid of the credit crunch, which is partially the reason why the Fed started QE again, quantitative easing again, and they even reduced the reserve requirement ratio to 0. But still, the Fed can't really do much. They can lower the interest rate, but they cannot really force the companies to lend. And I think that's going to be the next step for both the U.S. Fed and the U.S. government. Now, on the Korean side, the news in some ways is worse than it's in the United States because, well, as far as our businesses are concerned, we see nothing but bad news in the future. We've been hit by a very hard fall in demand in February and March, and even though our coronavirus situation is getting better, if the situation in U.S. and Europe becomes as worse as we fear, then chances are even during part of the second half of the year, our exports are not going to do very well.
Indeed. Well, you know, those numbers are reflected when we look at the 2 months into the outbreak here. The country's top 100 listed companies in terms of market cap have seen a third of their value disappear. In the equity markets worldwide, the figures in the tens of trillions of dollars. What does that mean for the global economy?
Okay, well, I think if anything, Korea and even perhaps China will get off relatively lightly. And that's because, well, Korea's economy as well as the Chinese economy has been paralyzed because of the coronavirus. But if you look at the numbers, only about 0.006% of Chinese population reportedly caught the coronavirus. Only about 0.017% of Korean population caught the coronavirus. And well, we don't know the future, but from the numbers that leaders of Germany, France, Italy, United States, from the numbers that they're citing right now, the people who catch the coronavirus in those countries are not going to be below 1%. They're looking at 60 to 70% of the people who will be catching the coronavirus. Now, hopefully that will not become true, but those are the numbers that are given by their leaders as well as their medical professionals. In that case, even with only, say, 1% mortality rate, which is lower than what we have in Korea, we're still looking at about hundreds of thousands of deaths. So we're looking at entire countries which effectively become something like Wuhan or Daegu. And that's for the whole country. Unless we get very lucky and these leaders and these medical officials' estimates are overblown, I think the situation for the other countries are going to be a lot worse than Korea.
Wow. Well, in other news, we see the U.S. and Korea last week initiating a new currency swap deal that seemed to give a quick boost to the won. But if you look at it today, it's still very much on the weak side. What's the swap designed to do, and is it working?
Okay, well, the swap was designed to reassure the investors that there are enough dollar available, and that's usually a tool to lower the nervousness in the market. But in some sense, the swap came a bit too early. What I mean by that is I mentioned the flight to safety, the flight to liquidity before. Everybody right now wants U.S. dollars. So there was most of the fall in the Korean stock market is actually coming from foreigners who are switching their Korean investment into U.S. dollar cash. And what this does is in some ways, it helps the U.S. Fed. It wants the companies to have more cash so that they will feel more secure, and they're doing it in a roundabout way. They're giving it to Korea, which in turn gives it to the U.S. investors. Now, in the 2008 global financial crisis, the currency swap increased the confidence in Korean currency market because the foreign investors saw that the United States will provide dollars to Korea in case Korea runs out of dollars. And I think it'll be very useful for that once the panic stops. But for now, because these companies need U.S. dollars, they're taking it out of the Korean market. So in a sense, the Fed is giving Korea the dollars to give back to American and European companies.
Got it. All right, Professor Young, thanks so much for coming on today. We appreciate it.
Thank you.
Now, the U.S. Senate has failed to pass a rescue package for the American economy. The Democrats saying the bill favors big business. In the meantime, ordinary Americans are under intense financial strain with massive layoffs ahead. More than 100 million Americans have been ordered to stay home. Hong Yu reports.
The number of coronavirus cases in the U.S. has surpassed 33,000 and the death toll is over 400. In efforts to combat the pandemic, the government has introduced a nearly $2 trillion rescue package to help its economy. But the Senate voted against advancing the rescue package on Sunday, with Democrats saying that the bill is mostly focused on helping corporations and does little to help workers and healthcare providers. The talks continue on Capitol Hill with negotiators struggling behind the scenes to strike a deal. During a news conference on Sunday evening, President Trump said this bill will help their economy.
We're working urgently with Congress on legislation to support the millions of workers, small businesses, and industries who have been hit hard by the virus through no fault of their own. Our goal is to get relief to Americans as quickly as possible so that families can get by and small businesses can keep workers on the payroll.
Trump added that he was approving requests from New York, California, and Washington to declare a state of major disaster in those three states. That would mean the National Guard would be deployed to those states the hardest hit by the virus to assist with sanitizing public spaces and delivering food to quarantine residents. Trump added that he had also ordered the Federal Emergency Management Agency to supply federal medical stations with more sickbeds to New York, California, and Washington. As of Sunday, nearly 1 in 3 Americans are under orders to stay home to slow the spread of COVID-19. Ohio, Louisiana, and Delaware are the latest states to order their residents to stay home. Beaches in Florida are shut down, as well as hotels and accommodations in the Florida Keys, at least for the next 2 weeks. The order came after crowds, mostly college students on spring break or younger people, were seen visiting the area. Hong Yu, Arirang News.
And the South Korean government has freed up emergency funds for small businesses by nearly 5-fold to revive the economy. Our Kim Jae-hee explains where small business owners can go for support.
With consumers staying home and spending less, small businesses are struggling to stay afloat.
There's no point in advertising because there's nobody out in the streets. I have no idea how I'm going to get through this.
Since mid-February, the number of people coming to our restaurant has fallen by half. We've seen direct hit to our sales.
Data from the Korea Federation of Microenterprise suggests that since the virus started to spread, the population flow in areas dense with small businesses has fallen by around 80%, causing small businesses to lose revenue of around $235 million a day. In the first 3 weeks of March, around 1,600 small businesses in Seoul reportedly closed down. To help small businesses hit by COVID-19, the South Korean government has decided to expand its emergency funds for small businesses to almost 5 times what it had previously allocated.
The South Korean government will allocate around $9.5 billion as an emergency fund for small businesses to provide them with low-interest loans at 1.5%.
Business owners are advised to apply for loans in different places depending on their credit score. Those with high credit scores of 1 to 3 are advised to go to commercial banks, where they can borrow up to around $80,000. Those between 4 to 6 should go to industrial banks, where they can get a loan of some $40,000. The entire process is expected to take about 1 month. Those with low credit ratings of 7 to 10 can visit the Small Enterprise and Market Service and apply for up to around $8,000. The government says this will only take an average of 3 days. The expanded loans will begin on a trial basis starting this Wednesday and will officially take effect next month. The Financial Services Commission in the Emergency Economic Council meeting on Tuesday is expected to announce more measures to stabilize the economy and the local market. Kim Jae-hee, Arirang News.
And that does it for this newscast. Thank you for watching.